What's going on, everyone? Welcome back to Courtside Financial. My name's Obi, and if you're new to the channel, make sure you hit that subscribe button so you don't miss out on the next video. And also make sure you hit that like button because it really does go a long way in helping out the channel. So a lot of you guys have expressed concerns over all the delisting talk that's been going on. As tensions between two of the world's biggest economies flare, a lot of investors' equity hangs in the balance. So for me not to cover this topic, I feel like would be completely irresponsible. Like I said on this channel before, NIO is a risky stock, and I understand the risk, and along with that, I have a high risk tolerance. If I lose all my money in NIO, I'll still be able to live the same way I'm living right now. So for me, I've already come to the conclusion that this investment is going to be zero or hero. So in today's video, we're going to talk about what could happen to Chinese stocks in the case of a delisting, in my opinion. Now, I just want to reiterate that none of this is investment advice. This is solely my opinion that I've grounded in my own research, and it's super important to do your own research and come to your own conclusions. Also, I'm only here to state the facts. I'm not here to get political. So we've been pretty much hearing a lot of talk about the delisting of Chinese stocks for quite some time now. Well, last week the conversation only got louder. We know that in May, the Senate passed a bill called the Holding Foreign Companies Accountable Act, which would allow for that to happen in the future. At the time of this bill being passed, my belief was that one thing for sure is that it would be a long process. Potentially 2 to 3 years down the line. It's not something that happens overnight. But anyhow, when this bill was passed, we saw a sell-off in Chinese stocks and big names like Tencent, Alibaba, and even NIO. Now in hindsight, that would have been a buying opportunity because these stocks have ran up ever since. Last week on August 18th, the US State Department urged colleges and universities to divest from Chinese holdings in their endowment funds. Colleges hold billions worth of equity in Chinese companies, so we have to take this thing serious and understand what could happen in the case of a potential delisting. So what does delisting mean? It actually just means that a company's shares will no longer trade on the exchange that it currently trades on. Investors can still hold on to their shares and have a piece of the pie, but it'll just be trading on a different exchange. Like the OTC, for example. Remember Luckin Coffee used to trade on the NASDAQ, the Starbucks of China? Well, due to accounting fraud, it now trades on the OTC, or the over-the-counter market. So the US thinks it's appropriate to crack down on foreign companies because of things like that. But mind you, US companies have also committed fraud in the past, and for the most part, they've been punished for it. I'm not going to throw out any names, but you can definitely do your Google searches. So this is the basis on which the Securities and Exchange Commission and the current administration is pushing for strict auditing practices among Chinese companies to make sure that they comply with NASDAQ requirements to a T. Interesting fact is that unaudited Chinese companies occupy 3.3% of the entire US stock market. I work at a tax and accounting technology company, so for those of you who don't know, an audit is just the verification and examination of a company's books or just their financial records overall. Companies have a responsibility to be upfront and honest with shareholders, and an audit just checks over that to make sure that it is happening. So moving on, I mentioned that you probably wouldn't lose your shares in the case of a delisting. So why are we concerned with that? Why are we watching so closely, and why does it matter? The NASDAQ is a prestigious exchange. Every company can't just be traded on the NASDAQ. There's even a lot of American companies that aren't on the NASDAQ and aspire to be on the NASDAQ. Being traded on the NASDAQ provides more liquidity and volume, as well as lower cost of capital when it comes to tapping into the debt and equity markets. Now, if we look at the premium for Hong Kong companies listed in the US market, there's a much higher premium for those companies than Hong Kong companies simply listed on the OTC. So we would expect a delisting to negatively affect the stock price. That answers our questions. Why are we concerned? Why does it matter? Why are we looking into this so closely? But that probably brings you to another question. Why am I still holding my shares? Simple and plain, I'm holding my shares because I'm optimistic. I think that two of the biggest economies in the world need each other. Part of that is that there's a bunch of huge companies in the US that conduct business in China, which fuels our economy. So it's in their best interest for the tensions between the US and China to come to a halt or calm down. Now, like I said, I could be completely wrong here, but I understand my risk, I understand my risk tolerance, and as a matter of fact, I just added some more NIO shares today. So that's going to be it for this video. I hope this video was helpful to you guys. Make sure you hit the like button, make sure you hit the subscribe button, and leave me a comment down below. I'll catch you guys on the next video. As always, thanks for watching.